Hello dear followers, welcome to our channel. In today's broadcast, we will include the comments of two Turkish economists before the Fed rate hike decision. We would be happy if you subscribe to our channel and share. Markets focused on the Fed interest rate decision. Those with dollars and gold beware, warning has come. Markets focused on the US Federal Reserve's, Fed, interest rate decision. What about the Fed's rate decision? What will be the direction of the dollar and gold after the decision is announced? Market experts answered. In the US economy, where the signals of recession are increasing, investors maintain their cautious stance before the messages to be given by the US Federal Reserve, Fed. What about the Fed's rate decision? What will be the direction of the dollar and gold after the decision is announced? Market experts answered. Expert economist Belgin Mavis used the following statements in her speech to millet.com.tr. Fed Chairman Powell will make a statement on the Fed's interest rate announcement for November today. Looking at the market expectations, the rate of economists expecting a recession had increased from 45% to 65%. In the same survey, 86 out of 90 economists expect a 75 basis point rate hike. It will raise the policy rate to the 4% range. When we look at investment banks, Goldman Sachs predicts that the Fed will continue to increase interest rates and raise the policy rate up to 5% in 2023. There are important elections in the USA in November. In order for Biden to sit in that seat again, he needs to achieve a number of things in the economy. At the point where everyone expects 75 basis points from the Fed, I expect a 50 basis point increase from the Fed. If the balance sheet does not increase at the contraction point, this will affect the market positively. I think that it will not make any changes in terms of an increase of 50 basis points, as well as reducing the balance sheet, and that it will not take an aggressive step towards interest rates by drawing attention to global risks by predicting that it will keep growth in the foreground. I predict that the Fed will act a little more cautiously, make hawkish statements, and increase by 50 basis points at this meeting. If the increase in inflation slows down, I think interest rate steps will not be enough to curb inflation. This inflation is different from inflation in previous periods. There is a pandemic process here. On the one hand, there are central banks that continue to tighten, on the other hand, there are central banks that continue to expand. What happens to the gold and dollar dry? In an environment where the dollar and oil are overvalued, the balances deteriorate. War has ravaged. I think that central banks will loosen the end of the rope about interest rate steps and will not take very aggressive interest rate steps. As for gold prices, we see movements on the dollar and gold side before the Fed decision. On the ounce side, 1646 to 1650 level is critical. A rise above 1660 triggers a move towards 1700. I think that on the ounce side, gold is deliberately suppressed, and on the physical side, central banks accelerate their purchases. There are some who attribute the rise in gold before the Fed decision to the retreat in the dollar index. Although this seems to have suppressed the gold a little, there is a rise on the ounce side. This shows that everything will take shape in Powell's statements. We will wait for Powell's statements to come back to 110 levels in the dollar index. In the second quarter of 2023, we expect to see an upward potential. What percentage will the interest level make the peak? The 4.5 to 5% range is the level of estimates. I think that there will be a maximum 4.5% level as the peak, and there may be a retraction movement in oil prices before that. Everything will become clear in the second quarter of 2023. It is expected that the Fed will slow down the rate hike in its next meetings, but I think we can see the slowdown before December at the November meeting. Expectations are priced towards the level of April 4th 50% as the year-end interest rate, but I think the Fed can complete this year before it approaches this level. Fed interest decision will be announced. What is the market expectation? Info Investment Deputy General Manager Tuna Sedinkaya used the following statements in a statement to millet.com.tr. Fed is expected to increase by 75 basis points. Fed will close the year with 50 basis points in the range of 4.25 to 4.50%. We are waiting. What percentage will the interest rate do to the peak? So much so that, after the continuation of interest rate hikes, Powell's forward-looking, bitter prescription rhetoric seems to be shelved for now, but today the Fed's 75 basis point rate hike is almost certain. Markets will seek answers from Fed Chairman Powell whether to be a hawk or a dove in forward projections. Despite the good growth data, the crisis pricing in the bond market deepened as the difference between 3-month, 10-year U.S. bonds/bill yields turned in favor of 3-month bonds. For this reason, while the expectation for a 75 plus 50 basis point interest rate hike until the end of the year rose to 51.5%, the 75 plus 75 basis point interest rate increase expectation, which was up to 70% after the inflation data, decreased to 42%. Are interest rises enough to control inflation? Although employment and growth data are good, the effect of interest rate hikes on demand-side inflation was limited. Similar to 2019, market participants have the power to reduce bonds/bill yields by switching from stock markets to bond markets. In such a case, there is a possibility that a decrease in the overnight reverse repo amount and a liquidity shortage in the financial system will create pressure on the Fed to reverse its tight monetary policy. How does Fed interest decision affect gold prices? In the steps taken by the Fed in the last meetings of the year, pricing on the gold front will not be as harsh as before. It provides relief under the sight of the end of the tunnel in interest rate hikes, more willing to attack upwards.